If your month-end close feels like surprise accounting every single month, you don't need heroics. You need a tighter process. I'm a CPA and I review closes for a living. What you'll learn: how to front load the close, where errors actually hide, a simple review rhythm, what evidence reviewers want. Main steps: pre-close, day -3 to 0, lock cutoff, chase missing receipts, reconcile first, bank, CC, then AR, AP, then key balance sheet accounts, post entries, payroll accruals, prepaid, amortization, loan interest. Flux check, scan big swings before you publish. Examples: quick story. Client had undeposited funds ballooning, was really duplicate sales receipts. Another had prepaid insurance expensed 100% in January, close looked fast, financials were wrong. Reviewer notes, red flags: unreconciled cash, growing clearing accounts, negative AP, AR, stale accruals. Reviewer insights: cash ties to bank, AR aging agrees to GL, AP has no zombie vendors, prepaids roll forward, variances have explanations, supporting docs, rec reports, JE support, aging, variance notes. Quick checklist: close calendar plus cutoff, bank, CC, recs, AR, AP, tie-outs, clearing accounts, prepaids plus accruals, fixed assets, depreciation, interest, loans, flux notes, final financial review. If this sounds like your close process, you're not alone. Drop a comment with your biggest close bottleneck. Like plus subscribe if you want more reviewer level walkthroughs.